Good morning, Maria. How are you? Well, great. I am glad you came into the office this morning to go over the good conversation that we had at the coffee shop a few weeks ago, discussing some of the goals that you and your husband had as a couple, but then also individually. And I look forward to the conversations that we have today. Well, now that we're in the office, it gives me a good opportunity to kind of walk through a little bit of my process and who we are as a company and my team. And then we're going to go into specifically some of the goals that you talked about with me last time, but also the analysis that I've done on all of your situation. And then we're going to actually recommend a few things before we get out of here today. So before we get started, do you have any questions or concerns or anything that's been keeping you up at night? Okay, wonderful. Well, we're actually going to cover that today. So before we get started, let me talk a little bit about the company itself and maybe its history and its mission and some of the value that I believe that we add. So as a company, I know we didn't really discuss it at the coffee shop, but we absolutely say that your financial destination is our mission. I have a huge passion for airplanes and aviation, and so I always like to start out with the mission statement of Hineman Financial. So at Hineman Financial, your financial destination is absolutely our mission. It is our goal to first understand what's most important to you as our clients. We will provide the highest quality of service to help you reach your financial goals and create lasting wealth in the industry. I like to talk about the value statement because this is how we truly add that value to your life through our goals. So Hineman Financial uses an established process to build a tailored solution to help clients reach their goals, just like we did. We had the goals conversation at the coffee shop. We will then form a life partnership to ensure that we stay on track. And I may have talked had some terms that you may not have understood what a mutual fund is. We're going to go into a little bit of a detail as we continue to partner together. Today's a little bit more about establishing those goals and putting out some recommendations. But if there's ever anything that I say that you don't understand, please stop me, because I think it's truly important that you understand everything that I'm talking about. And that goes back to the transparency. All the products that you're going to be in are going to be very transparent and understood. If you don't, please stop me, and I'm more than happy to help you understand what those goals are. So now that I've kind of gone a little bit more into detail than we did last time about the company itself, it's a very simple company. What we do here in the office is very noble work. We understand that your money, your hard-earned money, is something that you don't want to lose or that you don't want to risk. And that's why it's important that we stick with quality investments and hold them over the long term, which you have done a great job. You and Sancho have done a fantastic job. And so what I did is I actually created just a quick summary of the goals that you have, and it's something that we talked about in the coffee shop a few weeks ago. One of them is that you would like to fully understand balancing your budget month to month. We're going to talk about ways to help do that. We looked at your cash flow. Y'all sent in a lot of statements to me, and so that allowed me to look at kind of where we can save some money on your budget. We'll set out a recommendation for that. We're also going to talk about one of your goals, which is a short-term goal of establishing and assuring that your husband has adequate life insurance to cover the needs that you may have in the event of an early passing. One of the long-term goals, you said you wanted to retire at 65, so we're going to talk through that goal as well. And you did have a few questions. Those questions were, are you adequately protected if Sancho passes? Also, why you may be having a hard time balancing that budget. And another one is that you're interested in any other advice that may help your overall financial situation. So we're going to cover those things today. So I'm going to get a little bit granular, if you will, about some of the needs on a few of we're going to talk about insurance needs analysis. We're going to talk about your estate's needs analysis. We're going to talk about disability, retirement, and as well as cash flow. So again, there's going to be a lot of numbers on the next few pages. I've kind of highlighted what you need to kind of look at. Why I went through this is because I think it's important that you know that I really did the analysis. It's not just a random recommendation that I'm making given the conversations that we had at the coffee shop. I truly took the statements that you sent me, I took your cash flow, I took your net worth and balance sheets, and I put them together, partnered with some of the goals that we talked through, how much money in retirement that you need, the real estate assets that you may want to liquidate for retirement if needed, and those types of conversations. So that being said, the next few slides may be just a little bit granular for you, and that's okay, because I'm going to go back to a high level to show you what our recommendations are. So the first one is the big conversation of the short-term goal, which is, are you adequately, and is Sancho adequately covered for life insurance? And to answer that question, not necessarily. So if you look at the 10 times gross income approach, it's important to recognize that both of you have a little bit of a need when it comes to life insurance. And so when we get to the recommendations page, we're going to actually talk about what steps need to be taken to put yourself in position to be adequately covered for life insurance. When it comes to long-term care, we actually do not need any long-term care. So there's a few steps to making sure you're covered from an insurance standpoint. You have overall life insurance, but also something that can derail your retirement picture is any type of long-term care event. I've seen before clients go through millions and millions of dollars over years when it comes to long-term care, because long-term care facilities are $5,000 to $10,000 a month depending on where you're living and what type of facility you're at. So that being said, as it stands today, as a couple, neither one of you need long-term care insurance, which again, congratulations on putting yourself in position to be able to self-insure if that type of situation comes up. So when we look at disability insurance, this is if something happened, if you or Sancho left out of here, or excuse, if we're really going to focus on Sancho because he's the one that has a little bit of a need when it comes to disability. If he was to get in a wreck on the way out here and business income slowed down, you would need to be able to bridge the gap during that amount of time with some type of short-term disability or long-term disability policy. And as you can see where I've indicated on the arrow, excuse me, I'm a little bit behind on my PowerPoint. We're going to go back here, is where I've indicated on my arrow, you're actually going to need about a $35,000 a month policy. Now, it's not going to cost you $35,000 a month, and we'll talk about that a little bit more later, but you're going to need a policy that's going to cover approximately $35,000 worth of lost income opportunity to be able to cover the short-term or even a little bit longer-term disability. So before I go any further, do you have any questions? I know I just kind of went through a lot when it came to insurance. We talked about life insurance, a possible need there. We're going to talk about that recommendation in a little bit. And number two, we talked about long-term care. We talked about how you do not need to go out and purchase a long-term care policy. As we covered, you're completely able to self-insure at this time, which is fantastic. And then a disability policy, we're going to put a recommendation in. And you're going to have a financial plan. You're going to have a written document that's bound together that's going to show you exactly what you need to do to move forward with that short-term or long-term disability policy. So any questions? Okay, wonderful. And we're gonna send you home with a document showing any key terms that you say, Keaton, you said this, and I really didn't understand that. It's going to have some simple definitions of what long-term care is, what type of event would actually trigger a long-term care event policy to be enacted, or what is a short-term disability policy, or even simple things like inflation or return on investments. So we're going to now talk about retirement analysis. So fantastic job. Again, I've said congratulations multiple times in this conversation today. And that's because the hard work that you and your husband have put in throughout the years has really put you in a place that is near the top of the top when it comes to retirement and putting yourself in position to be able to live out retirement comfortably. And so that being said, when we look at your current retirement, and the income need in today's dollars, we talk about needing to replace about $495,000 worth of income at retirement. What that kind of looks like. So total retirement assets on the first day of retirement, we're looking at about $15 million, which is fantastic. And then you look at, do we need to save any more? And the answer is yes. You need to continue to save, but you may not need to save as much as you're saving today, because you are on track to meet that goal, barring any life event. And so that's where I kind of emphasize, barring any life event. You don't want to go out today and buy a $5 million vacation home that won't be earmarked for retirement, or go out and buy a couple Lamborghinis as a depreciating asset. But as it stands today, y'all have done a fantastic job saving for retirement. Does that make you feel any better? Okay, wonderful. So when we look at estate analysis, so what does that mean? Well, if your estate is too large, or so large, I wouldn't say too large, because our goal in life most of our goals in life is to build a sizable net worth or a sizable estate, so much that we can retire comfortably, or if our goals are to leave a legacy for our kids, that we leave a legacy for our kids. Well, there is something called an estate tax. What that is, it's a tax that is out there that will allow the government to tax any estates larger than the amount that they set. So back in 2018, they actually changed that number. They doubled that estate tax. Not double the estate tax, but the estate tax exemption, meaning your estate could be double the size as it was in 2017 and still not trigger a 40% estate tax. And so that number is so large today that in your situation that you stand, even showing your wealth continuing to grow to and through retirement, we don't see any estate tax situation. And that is good, because estate taxes are at 40% these days. And so if that was a situation, we would have recommended some additional goals and some additional tasks that we would have to execute on to be able to reduce or eliminate any type of estate tax situation. But as it stands right now, today, you do not or will not owe any estate taxes on your expected date of death at the end of your life. So let's talk about cash flow. So one of your questions was that the balancing of the budget and are we saving enough in those types of conversations. So what I did was I took your cash flow statements and your balance sheets, and I actually created what your discretionary cash flow, which I put an arrow on right here, as well as your unallocated savings. Your discretionary cash flow, what does that mean? That means the money at the end of the year that you have discretionary, meaning you can do whatever you want with it, and that number is $29,000. And also you've got some unallocated savings, money that we're putting aside that we haven't necessarily earmarked for something. And so I've indicated that there, and I'm going to talk about that later in some recommendations. But this is just some analysis we've done on the cash flow. So in terms of net worth, our total assets as it sits today is approximately $8 million. It's a little less than $8 million. And then our total debts and liabilities, meaning what do we owe to the bank or to someone we're borrowing this money against, we owe a little over $3.2 million, so totaling a net worth of a little over $4.5 million. The exact number is $4.69 million. Do you have any questions about net worth or cash flow? Okay, wonderful. So before I get a little bit further into what we would recommend, I want to stop and just take a break to see if there are, if I've lost you, or if any questions. Okay, wonderful. Well, before we do that, I do want to say that a lot of the recommendations we have, some of them are going to be for you, but also some of them are going to be for you to have a conversation with Sancho, because I know Sancho had originally said that he was not interested in becoming a client, and that's okay. I do think it's important that the partnership includes Sancho, but it's something that I think we can establish over time. But I am going to recommend a few things that you maybe have a conversation with him about. And if you need me to potentially have a conversation with him, I'm more than willing to do that as well. So after running the analysis on your current situation, we would not recommend that you purchase long-term care insurance. You have enough assets to self-insure, so it's important that you continue to allocate money to savings so that you're able to set aside that money in case of a long-term care event. The second one is that in the event of a short-term disability or long-term disability event, we do recommend that Sancho needs a policy that would cover that $35,000 a month in terms of short-term disability. So as you saw in the life insurance analysis, Sancho does need an additional coverage to cover if something happened to him, so that we would recommend a 20-year policy, 20-year term policy for the face value of $5 million on his life, and make sure to put you as the beneficiary in case something happened. We'd also recommend that you purchase some life insurance as well to be able to cover that $4.5 million in liabilities that are out there, just in case something happens. He would be able to pay off any types of debts that may be out there. So we would also recommend that you purchase a 20-year term policy for the face amount of $5 million. You don't have any current need for your healthcare insurance. Looks great. For protection purposes, I would also recommend a $5 million umbrella policy. What the umbrella policy is, and we're going to cover that in just a second, but it allows you to be covered in case you have some type of lawsuit against you, or it just increases your overall financial security in terms of protecting your assets. And also, we would lastly recommend that you obtain any type of potential insurance rider that you can for the amount of artwork, jewelry, coins, and stamps that you have. And also, I would cover Sancho's golf equipment. And what I've done here is I've actually put together a quick little table showing what our recommendations are, who's responsible for them, when they're responsible, and why and how. So, for example, on the short-term disability policy, I said that Sancho is responsible. When is he responsible? I put immediately, because I think it's important. If something happened to him over the next few weeks or the next few months, you would want something in place to cover that immediate cash flow need. And why? I put to ensure your needs are covered in case of a short-term disability event. And how do we do that? We're going to contact your local insurance agent as soon as you have that conversation with Sancho. Again, additional life insurance for Sancho when we need it immediately, and we also can get that from Hineman Financial. So we've committed to running you a quote for your $5 million 20-year term policy by July 31st, July 31st of this year. Additional life insurance for you, Maria. We're going to take care of that immediately, and you will leave here with a quote. I've put that Hineman Financial will run the quote for you, but actually Vanessa is doing that right now, so you'll have a quote by the time you leave here today. Purchase an umbrella policy. I put both of you are responsible for that, and to be done by September 31st of 2019. Because we want to make sure we get that umbrella policy in place. Your insurance agent that you work with for your property and casualty should be able to run that very quickly, but I would like that in place by 9/31 of this year. And also, we want you to contact your insurance agent to obtain any types of riders for the amount of assets you have in your art, jewelry, stamps, coins, and golf equipment. So let's move to retirement recommendations. So for retirement, we would absolutely say you need to maintain your current savings in your retirement account so that you can stay on track to meet your goals at the age of 65. That's super important. Like I said earlier, I don't want you to go out and buy a big beach house or a Lamborghini or something like that may not be earmarked for retirement. So I think it's important to kind of stay on track, and we're going to talk about how to do that later. We're also going to talk about drawing security at full retirement age, and then staying invested so you don't try to time the market or anything like that. So we put a maintain, our implementation plan says we want to maintain current savings. Who's responsible for that? Both you and Sancho are responsible for that, all the way to age 67 for yourself and age 65 for yourself and age 67 for Sancho. Why is that important? We want to make sure that we assure that the assets are available to maintain a healthy retirement according to your stated goals. And how are we going to do that? We're going to do that through meeting quarterly with Hineman Financial to track your current goals that we're establishing now. And then also, your recommendation, or my recommendation for you too, is retire at 65 years old. That was one of your stated goals originally. And so we're going to continue to build wealth through your annual savings. My PowerPoint was a little bit behind, but again, I apologize. We've put that you maintain current savings and retire at 65. Who's responsible for it, when they're responsible for it, why, and how. So let's move on. Any questions? So when it comes to estate recommendations, again, we talked about no necessary plan of action for avoiding any estate taxes. But we would recommend that you create a will so that your final wishes are executed. It's very, very important that you do not die intestate, meaning you die without a will. It's also important that you advise Sancho to create a will as well. And if you need a contact to do that, I've got some cards with me that you can take home and reach out to the estate attorney. We don't do that in-house, but you can reach out to an estate attorney to be able to help draw up those wills, and you would sit down with them and talk about what your goals are in terms of what your final wishes are on the day that you pass. So we would also say it's important that you create what's called a living will, which is going to give someone the orders that you recommend in case you became incapacitated and unable to make those healthcare decisions. And the estate attorney will be able to explain it in further detail what that means. And we would also recommend that you establish a power of attorney to help you make those final decisions, financial decisions, if you're incapable of doing so in terms of who would deem you incapable. A healthcare professional would say, hey, we do not believe Sancho or Maria is able to make financial decisions, and that's when a power of attorney would be enacted to be able to make those decisions. I have built out an implementation plan that's going to be in your financial plan as you leave today, that's going to help you walk through the necessary steps to be able to take to create that will. So both of you are responsible. I have set a goal to implement that within the year. So 12 months from today, we would like to see some type of will in place. And it's to ensure that the assets are distributed according to your wishes. And how do we do that? We're going to meet with an estate planning attorney. Also, establishing a will and a durable power of attorney is part of our recommendation. Sancho and Maria is responsible, and at the time of the will creation. And so you also want to specify to your estate planning attorney that this is part of your goals whenever they're building out the will. They'll build out a package that they'll send home with you. It'll include the will, the living wills, and power of attorney. And then, right now as it stands, the estate tax law has a large number on it, and I did some research, and it's got something called a sunset provision on it, meaning in 2025 that estate tax increase may come back to where it was back in 2017. So I think it's important that we meet on a quarterly basis to make sure we stay on top of what that estate tax law, especially as we get closer to 2025. If it does come back down to the to where it was, we may have to enact some additional plans of action to be able to avoid any type of estate tax situation. So I said that we have a goal or recommendation to consider future asset distribution to minimize estate tax. That is in the future. We're both responsible, Sancho and Maria. It's a continuing, ongoing thing. Changing laws are something we're always going to have to deal with. And so meeting with Hineman Financial Quarterly is going to be something that's very, very important. In terms of cash flow net worth recommendations, we would recommend that you refinance your primary house due to interest rates decreasing. This is something that's going to increase your cash flow on a month-to-month basis, and we're going to talk about how we can do that in just a second. We would also recommend that you pay off all existing credit card debt with the available cash that you have. And it's also important that you continue monitoring spending each month so you can recognize when you overspend, why you overspent, and then maybe have the necessary steps in action to be able to not do that on an ongoing basis. So here's our implementation plan for our cash flows. So we would say to refinance your primary dwelling. Who's responsible for that? Sancho and Maria, both you and your husband are going to be responsible for that. I would say within the year, because we don't know if interest rates are going to go back up. But I would say our timeline is we want to do that within the year. And why do we want to do that? And I would say that the lower interest rates will decrease your mortgage payments over time, creating additional cash flow. How do we do it? You're going to contact your local bank. You told me that your mortgage on your primary dwelling is with the bank that you bank at. And so I think it's important to call them. If interest rates have dropped, you may be able to refinance that at a very, very low cost to increase your current cash flow. We would say to pay off all of your current credit card debt. Sancho and Maria is responsible, and we want that to happen within the year. Credit cards have a very, very high level of interest, meaning you're going to pay a lot more to borrow credit card money than you're even paying to borrow money for a house. And I would say it's important to utilize the current cash that we have. And then another recommendation is to continue to monitor your financial ratios. Who I've put responsible for that is myself, as well as partnering with the Ruiz family, because we want to do that ongoing. And why is that important? I said that monitoring ratios will make certain that we'll increase cash flow and maintain our long-term goals to create lasting wealth, which was part of the overall conversation that we had. And how are we going to do that? Well, that's quarterly meetings with Hineman Financial. So before we move on, do we have any questions? Wonderful. Again, I know I've probably talked through a lot of terms.